Hello everyone, welcome back to the channel. In today's video, I'm going to be showing you one of the most reliable ways to analyze the financial market, not just the Forex market, but also the cryptocurrency market, the stock market, and the synthetic indices market. This strategy works across all financial instruments, all right? This is how the the smart money traders actually execute trades and exit the market, right? Using the multiple time frame analysis. So at the end of this video, I'm going to leave a quiz to test your understanding of of the concept discussed in this video. So do well to respond to the quiz in the comment section, and I'll react to your comments. All right. So without further ado, let's dive into the video. Now, we are going to be analyzing. This is USD JPY, right? We're going to be analyzing this pair from the higher time frame and narrow it down to the lower time frame, right? So we're going to be using 1 day time frame as our highest time frame, right? Now, if you look to the top left, I've selected the 1 day already. It means each of these candles you see represented on the screen took 1 day to be formed, right? Now, the first thing is to do is to select your time frame. Once you've done that, the next thing is to get a clear picture of the trend, right? You want to know where the market is trending so you don't trade against the trend. Remember, the trend is always your friend, right? So now we're going to go back a little to see where price is actually coming from. Now, let's look back here. This was a higher low, sorry, a lower high, another lower high, lower low, a lower high, lower low, a lower high, a lower low, a lower high, or lower low, right? Lower low. This is the last lower low that was created, right? Now, so if you look at this critically, you're going to see that this was actually the last lower high that created this low, right? So look at what price did. But price instead of continuing this trend, what we expect from price is to do something like this to continue the trend to create another low, right? To continue the trend. But price did the direct opposite of it. So look at what price did. Price instead took out this lower high here that created a lower low, right? And that became what? That became a change of character. When this happens, we say price has changed character, right? So I'm going to label this zone here as a change of character. Now it means price is about to move in the opposite direction, right? And then after that change of character happened, look at what price did. Price just kept creating series of break of structure, right? Price kept creating, this is BOS, we refer to this as BOS. This is another BOS. This is another BOS here as well, right? This is another BOS here. So you see price, this BOS means break of structure, right? And break of structure is positive. It's positive because it continues the trend, right? It moves in the direction of the trend. But the change of character is negative because it changed the direction of the trend, right? It is against the trend. Just if you look at this market, this was a selling market, right? Until this change of character happened, and then the market started buying, right? So now we've understood, okay, this is another BOS as well. This was the last BOS that was created, right? This is the last BOS. So now we knew where price was coming from now. Oh, sorry, this is not a change of character, please. This is a BOS. Sorry about that. This is a BOS, right? This is a BOS. Now, this was the last BOS that was created, but look at what happened here. This is the last lower high. Sorry, this is the last higher low, right? That created this recent higher high, right? So we don't expect price to take out this low because this low fulfilled its obligation by creating a new high, right? So we expect price to respect this low. But instead, price came all the way down and took out this low again. Price took out this higher low, right? And then went further to also take out this higher low as well. This higher low as well, right? So we refer to this zone as well. This is a change of character. When this happens, we say, okay, this is a change of character, right? And then this zone here, we refer to this zone because this zone here as what as BOS, right? So this is a BOS. Why is it a BOS? It's a BOS because price, this is a change of character, right? And that means price is moving downwards now. So price started creating series of what? Price started creating series of lower highs and lower lows, lower highs and then lower lows, right? So that means this is now what a downtrend, right? But then look at what price did again. Look at what price did again. Price started to change character again here, right? Just look at this was the last lower high that created this low, right? We expected price to keep going downwards, but look at what price did instead. Price decided to take out this lower high that created the last lower low, right? So what do we say this zone is? Can you guess? Change of character. If you got it right, clap for yourself. So this is a change of character, right? Why? Because price took out this lower high that created the last lower low, right? So from this zone, and the price went on to start creating new break of structure to the upside, right? Price started creating new break of structure to the upside. Now, so this is where price is currently, right? So that means this is now our point of interest. This zone right here, this is a new swing structure that was created because now there is a break of structure, right? There is a BOS here. Let me label this zone as BOS, right? This is a BOS. So we have a BOS now. So this zone now is our area of focus. This is our new swing structure that was formed. So it means if we are trying to enter into the market, we are going to be entering into the market based on where price is currently, right? So what are we going to do? We are going to be looking for element of price that is in play here that we can possibly enter into the market from, right? So if you look at this zone carefully, this is a demand zone, right? This is a demand zone. Guys, please, at this point, if you've not subscribed to the channel, please go ahead and click on the subscribe button. You don't need to pay any amount, just to click on that button, and also click on the like button as well, just to help this channel grow. All right. So this is a demand zone, right? In our last video, I showed us how to identify valid demand zone, and I gave us some criteria. I think I gave us about 5 criteria. One of those criteria is that our demand zone, there needs to be a fair value gap or imbalance, right, before our demand zone. If you look at this zone, we have an imbalance here, right? This is an imbalance before our demand zone. So this is one of the criteria for selecting our demand zone. So guys, if you've not watched that video, check the playlist and watch the video so you can have a better understanding of how to pick a valid demand and supply zone, right? Now, the reason why we are picking this zone here and not this one down here is because this our demand zone here, this one down here there is no imbalance, right? There is no imbalance, right? So it didn't meet some of our criteria. So we don't refer to this demand zone as, as a high probability demand zone. So that's why we selected this demand zone, because you see the psychology behind this zone is that when this particular order enter into the market, right? This order here, when price enter into the market, when liquidity enter into the market at this point, it was so high that it moved impulsively to take out this high, creating imbalance. So that's why we are anticipating that because of the high volume of order here, when price get to this zone, price is going to respect this zone and buy and just continue buying to what? To give us a new BOS, right? So this will be our target. We are anticipating that price will give us a new BOS here, right? So now, having selected our demand zone, the next thing we're going to do is to go down to our one. Remember, we are still on the 1-day time frame, right? Now we've identified the trend, we've identified our swing structure, we've identified our demand zone, our valid demand zone. The next thing to do is what? Is to go down to our 1-hour time frame to see how we can get a better demand zone, right? Within this our 24-hour demand zone. Now, the reason why we are not going to just use this demand zone to enter into the market, probably setting our buy limit here and then just do something like this, our buy limit here, and then we'll target this high and our take profit, and that will give us, I think, like 4 times our money, right? Now, the reason why we are not going to be doing this is because this zone is too wide. Just look at our stop loss. Our stop loss is like 100 pips for our stop loss, right? Just look below where you see stop, right? And then you see 107. So our stop loss is too wide, and we don't actually want to be using wide stop loss like this. So that's why because we want a better risk to reward. The risk to reward here is 4, right? Risk reward ratio. This means this is the amount you're going to get. This is the let's say if you risk 1, you're going to get 4.24, right? if you risk 1%, you're going to get 4.24%. But we want something higher than that. So we're going to refine our demand zone on the 1 hour time frame. So we're going to go down. This is the zone. This is our demand zone we selected. So we're going to keep, push price back to see that particular area we highlighted, right? Okay, so this is our demand zone we highlighted on the 24-hour, sorry, on the 1 day time frame, right? So this means what we selected on the 1 day time frame is all in this rectangle, right? All of this price here in this rectangle, right? Now, so within this zone now, we are going to look out for the the 1 hour demand zone as well. Just like we selected the valid demand zone on the 24-hour, within this zone here as well, we're going to select a valid 1 hour demand zone. So if you look at all these zones, if you look at all these, just look at these all these demand zones here, they are not valid. Why? Because there is no imbalance and they don't meet our criteria. But look at this singular demand, look at this demand zone. Look at this demand zone here. Immediately after this candle here, look at what happened. A strong momentum, a push to the upside, right? And there was a break of structure in the process, right? So price moving possibly from this zone to break structure to the upside, right? So this means this is where the huge order that we saw on the 24-hour actually entered into the market, right? So that's why we are going to hold on to this zone and we are going to drag it all the way. So let me label this zone here as well as a BOS, right? As a BOS, let me remove this. Let me remove this to make it easy for us. So you see how price move impossibly from this zone to give us a new BOS here, right? So now to make this chart, to not make it complicated, we are going to go ahead and remove these 24 hours demand zone we selected. Now we are officially done with this 24 hours, right? Because it has helped us to pick our 1 hour demand zone, which is what is more important to us right now. So we're going to remove these 24 hours now, just to make the whole thing a bit clearer, right? So we're going to drag these demand zone all the way here. These are 1 hour demand zone. We're going to drag it all the way here to where price is currently. So let me cut price. Let me try to cut price, right? Let me try to cut price from somewhere here. And then I'll drag these all the way here, right? So you can see how tiny our 1 hour demand zone is compared to the wide demand zone we had on the 24-hour, right? Now, so let me try to fit in this thing out to our 1 hour, this our buy position out to our 1 hour demand zone. So you can see the risk to reward that it will give us now. Just look at it. Something that gave us 4.24 on the daily. Now that we've refined it to our 1 hour now, look at it. It means if you risk one now, you'll be getting 36%. So you can see the difference, right? On the daily, if you use the daily to execute the trade, you're getting just 4%, but with the 1 hour, you are getting 36%. And this is why understanding time frame analysis, multiple time frame analysis is very, very important, right? If you want to be making big bucks from this market, right? So what we are going to do is we are going to just remove these buy positions now, right? We are not using that buy position now because we don't want to enter the market aggressively, right? We are still going down to the 50-minute time frame. So we want to actually get confirmation. We want to see what price we do when price get to this our 1 hour demand zone, right? Because if there's no confirmation, it is better to enter the market on confirmations than to just enter aggressively, right? It will save you money. It will help reduce your losses as well, right? And it will aid you to take more high probability trades based on the reaction of price from that point of interest. So what I'm going to do now, I'm going to play price, right? So we want to see how price will react at this 1 hour demand zone. And look at what price is doing. Before price got to our entry, look at what price is doing. Let me pause price quickly. Look at what price is doing. Price is creating lots of inducements now, right? Look at all this inducement that price is creating, right? This is price taking lots of liquidities before it gets to our zone. And remember in our last video where we talked about liquidity, I explained to us extensively what inducements are. So if you haven't watched that video, please check out the playlist so you can watch that video on liquidity, right? And it will help your understanding of inducement. So price is creating this inducement. Why this inducement is important for this our zone is because when price is done taking all of this liquidity, getting both buyers and sellers into the market, manipulating everyone that's trading this zone, right? Price will have sufficient liquidity to be able to move impulsively from this our zone, right? So that's why inducement before our point of interest is actually very, very important. Okay, price has reacted nicely from our point of interest. So that means if we actually did, if we enter this market aggressively, for some persons that will just enter the market aggressively, without confirmation, they would have been, they would have made so much profit already. That would have been, they would have gotten like how many, 15 times their money already, right? But because we want confirmation, we want a change of character at this point of interest first on the 15 minutes time frame before we can enter into the market. So now we are going to go to the 15 minutes time frame and we are going to see what price is going to do when price revisits this zone. So let's play price and see. So we want to see price back here and then we want to see a change of character to the upside, right? Then we can pick a trade. Since we are not entering the market aggressively, right? That would have been our first position, right? But then let's see what price is going to do. Let me try to increase it. Let me try to increase this now to save our time. I don't want this video to be so long. Okay, price is still creating lots of inducement, right? Before the retest, and this is actually a good thing, right? So let's see what price is going to do. And we are not actually scared, right? Because we must get confirmation before we enter into the market. So we don't, if there's no confirmation, we simply don't enter, right? Our money is saved for the next opportunity. But if price gives us a confirmation, okay, let me pause that now. Okay, perfect, perfect. Now we have a confirmation. Guys, let's do a quick markup here. Just look at this. What is this? Can you guess? A BOS, right? And then look at this, another BOS, right? Another BOS here. And another BOS here as well. Look, this is the last BOS. This is the last BOS, right? This is the last BOS right here. So a BOS there. And we don't expect, remember I told us, this is the last lower high that created this lower low, right? This one right here. So we don't expect price to, take out this this lower high anymore because it fulfilled its obligation by creating a new low, right? But instead, look at what price did. Price actually took it out. Price took it out, right? So let me expand my screen. So what do we refer to this zone? Refer to this point as what? A change of character, right? So now we have a change of character. So now that we have a change of character from our point of interest, what are we then going to do? We are going to then select our what? Our point of interest or the element of price are playing in this zone, right? Which is our order block in this scenario. So we're going to select our order block and then we're going to place our buy position, right? We're going to place our buy position and then we are going to target either this high, right? If we are either target this high to give us, let's say 1:3, or we can decide to, target the high on the 1 hour, right? This high here, or we can decide to target this recent high the market created, which is this one, right? This recent high here. So we can decide to get 14 times our money and all that, or we can just stick to the 3%, right? So let's go back to the 15%, the 15 minutes time frame, and let's play price and see what price did. So let's see what price did. So look at what price did. Price creating inducement. Just look at this. Price still creating inducement before you get to our zone, right? Look at the inducement price created before you go to our zone, right? So this actually even confirms that our zone is actually even going to hold. It gives us more confidence that our zone is going to hold because of this inducement, right? After price took out the inducement, visited our order block, and just look at what happened. Just look at that. Just look at that. Let me play price now to see. Our entry point has been tagged, right? So we are now in the trade. We are now in the trade. So boom, right? If we targeted this high here, we would have hit our take profit already. But just look at how sweet and easy that is. Guys, I know this might sound complicated a bit. what you need to do is you need to watch the video over and over again until you understand this concept. Because if you do understand this concept, trust me, you are going to be trading any financial market at all, and you're going to be making good money from the market, right? And with this confirmation entry here, you're going to be taking you'll be taking more high probability trades, and you'll be minimizing losses and maximizing profit because you're entering the market on confirmation on lower time frame after doing your analysis from the higher time frame. Remember, just a quick recap now. Remember, we started from our higher time frame where we picked our demand zone here, and then we went to our 1 hour time frame to refine our demand zone, and now we use our 15 minutes to what? To get a confirmation, a change of character at the 1 hour demand zone, right? And we entered into the market based on the order block, which is the element of price that was at play for the change of character, right? And that is what gave us a very, very good trade. So guys, I'm going to leave the quiz in the comment section. So ensure you attempt the quiz. I'm going to react to your comment, tell you if you're wrong or right. All right. So if you haven't subscribed still, please go ahead and click on that subscribe button, and also click on the like button just to help the channel grow. All right. We are family here. Let's support this channel. All right. So guys, see you in the next video. Peace.